Welcome back to the Retire Young audio experience. Don't forget to go to the website at retireyoungaudio.com and leave us a comment on what you want to hear next.
Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. Once again, on the show today, I have my great friend, my great partner, my great tag team, Al Condixon. Al, how you doing today?
You know what? I am doing very well. How about you?
Hey, it's a beautiful day. I can't ask for much more than this. We're got a huge show today. We're going to talk a lot about financial literacy as we do every single week. We're going to talk about how the institutions trade and invest. Al, we have a lot of investors that want to understand how the institutions trade and invest and why as well. And the big thing is they want to understand, how can I jump on their coattails and ride along with them? We had a huge move in this market this week, up and down, and we have a lot of opportunities in these financial markets. Al, let's recap before we get started here today. Let's recap what happened this past week and what's really happening long-term in these financial markets.
Yeah, the last probably 2 or 3 weeks, we started out by saying it's a crazy market. It's a crazy situation.
Crazy always means good.
Yeah, but you know what? This last week, crazy went on steroids. I mean, we had 3 big issues that were really impacting the market before. It was the COVID-19, the pandemic issue, and then dismal economic news, unemployment, and then the China-U.S. relationship has hit a snag.
Yep.
Now you got to add. We got an election coming up. That could have a big impact on these markets going forward.
Correct.
And then over this last weekend, unfortunately, there were a lot of protests and a lot of rioting in the country. And I guess this is kind of what I would call a what-if market. The market wants to go up. It really doesn't seem to make any difference anymore what's happening. About 2 or 3 months ago, maybe a little bit longer than that. If China said something that might have impacted the trade deal, or if the U.S. said something that might have impacted the trade deal, either positive or negative, it would have totally impacted the market.
Yeah.
Now it's more of a kind of a shrug of the shoulders.
It's kind of whatever happens, right?
Yeah, but it's really, now we're looking at kind of I'm calling it a what if market. What if the economy opens and things go really well? What's the impact going to be? What if the economy opens as it is now and things don't go well? What's the impact going to be? What if there's a vaccine that is coming up down the road, or a treatment? And then, what's going to be the impact of this election? So there's a lot of things going on. And I think what's happening is it's causing a lot of people to feel kind of a loss of control, a sense of loss of control. And they're looking for a way to regain at least some of that control. And one of the big areas is in finances, because that's a pretty important issue for most people. I think with the stay-at-home situation that we've had, a lot of people now realize the importance of an emergency fund, for example. A lot of people had their retirement funds hit, and they just want to know how to be able to take control and how to be able to make sure that going forward, if we have an issue like this again, and by the way, there's always going to be a crisis. There's always something, and this market always comes back. The market has gone through everything you can possibly throw at it, including world wars and now, a significant pandemic. The market always comes back. And right now we've got a Fed that is really feeding this market.
You're right. There's a lot of news that's happening now, and a lot of investors trade and invest off that news, which is a lot of emotion. Now let's talk a little bit about why most people trade off the news and invest or make their investment decisions off the news. But does it really matter what's happening?
Yeah, the reason that people do is because they're human beings and they're born with emotions that take over really when we see what's happening. And people do react to the news, really not understanding that by the time the news comes out, it's really too late in many cases to be able to do something. But the news, things like this are always going to happen, and people are going to react. It's going to move the market. We're going to have a lot of volatility. But there is something that will happen on a repeatable, reliable basis, and that's institutional activity, big bank activity. We're talking about companies like Goldman Sachs or J.P. Morgan or the big hedge funds or people like Warren Buffett. Those are the people that are going to be doing something on a regular basis. So it really makes sense to find out what they're doing, understand what they're doing, why they do it, and then just follow what they're doing. And they're not going to send you a note or give you a call telling you what they're doing.
Are you sure about that?
No, I'm pretty sure. I wait by the phone every morning, and Goldman Sachs and Warren Buffett don't call.
That call never comes. Well,
but fortunately, they leave clues on the market.
You're right, but let's talk about real quick why the institutions are doing what they're doing. I mean, we know that the institutions run the market. The big money is what moves the market, but how are they trading and investing?
Probably different than the way most people trade and invest. They're basically telling their clients, telling the average investor to put together a portfolio and then just sit on it, kind of a cruise control type of a thing where you have a portfolio, don't worry about drawdowns, don't worry about corrections or bear markets. But the institutions aren't doing that. You can bet that those major companies that have traders, many traders working for them on a daily basis, they're not telling them to put together a portfolio and then not doing anything with it for 10 or 20 or 30 years. They're active every day. They're trading things like the other financial markets. Most people are familiar with mutual funds and stock, and that's pretty much it. But the institutions are also trading in the futures market, in the foreign exchange market, in the options market. And a lot of people are saying, yeah, but those are things that we can't trade. We don't have access to them. Well, that's not the case. We have advantages now that we didn't used to have as average investors, private investors. And the education is there. The internet is there. Trading platforms are there. We can get into and out of things very quickly, whereas the institutions take a little bit longer to do that.
And that's the key, is the average investor does not have that education. The average investor don't know what futures are, what Forex is, options, and different opportunities that are out there for the average investor. And think of it this way, the institutions are trading and investing different than that average investor. And also, the institutions are putting the average investor, say you have retirement accounts or managed money, they're putting their clients in different positions than most likely what they're doing in their accounts. So it's always good to understand and know how the institutions trade. Al, you opened up a can of worms by kind of letting the cat out of the bag, and you mentioned the futures market and the Forex market and the options market. I'm glad you did that, because in the next segment, I want to dissect these different markets that the average investor may have heard about, but don't understand and know that the average investor can utilize. So we're going to talk about futures, Forex, options. We're also going to get into the IRA, 401k, different retirement accounts. This is Josh and Al with the Retire Young Radio Show. We will be right back.
Thanks for listening, and don't forget to go to the website at retireyoungaudio.com and drop us a line.